5 things to watch in Bitcoin this week. 60,000? After a promising but restrained weekend, BTC/USD is once again back to beating out resistance as major markets reopen. Given the strength of underlying technicals and buyer demand, bulls may have cause for celebration in the next few days. Resistance, however, has kept them in check for weeks. Stocks began on a familiar positive note in Asia as traders betted on existing highs continuing to hit. A fresh all-time high for the S&P 500 index last week ensured a buoyant mood, with the coronavirus pandemic doing nothing to sour what have been historic returns for various markets. Commodities were dictated by the ransomware attack in the United States, which pushed oil prices to 3-year highs before the market calmed. The dollar suffered as the attack hit, with the US dollar currency index, DXY, suddenly tanking in a move which boosted Bitcoin beyond $58,000. On Monday, with the pipeline still closed, only a modest rebound was evident, allowing the potential for further DXY-based gains for BTC/USD. It's all systems go for Bitcoin, at least when it comes to network fundamentals. Following the sudden hash rate dip last month, tied to miners being flooded in China, network strength and associated price performance have firmly recovered. The process was already evident last week, with commentators noting that the negative impact of the event was practically behind Bitcoin already. Now, however, forecasts reflect unprecedented interest and competition among miners, along with a firm commitment to the network's future. According to data from on-chain monitoring resource Blockchain, hash rate is now at new all-time highs, with its 7-day average going from 131 exahashes per second, A/s, on April 25 to 177 A/s as of Monday. Bitcoin's 7-day average hash rate chart. Difficulty, which automatically adjusted downwards to take account of the reduction in miners, is now also due for a major hike of its own when it adjusts again in around 2 days' time. If the old adage price follows hash rate proves itself to be as true today as previously, Bitcoin hodlers could feel the knock-on price benefits in the coming weeks. On the topic of price benefits, traders this week are looking for a springboard effect in BTC spot price action which could lead to a breakout. After climbing and reversing but broadly putting in higher highs and higher lows in recent days, Bitcoin is due to make a more committed statement. On Monday, popular trader CryptoEd said that a leg down from current levels near $59,000 should end around $800 lower before a resurgence takes out the pivotal $60,000 resistance zone. Looking for a bounce and continuation up towards 62K and 68K after that. Potential bounce area, green box, equals 58,100 to 58,200, he commented on Twitter alongside a projection chart. BTC/used 1-hour candle chart, Bitstamp. The battle for final resistance near all-time highs of $64,500 has been raging for several weeks, with each attempt to overcome sellers ending in a price dip of various strengths. A look at the order book structure on Binance, the biggest exchange globally by volume, showed that the $60,000 zone was still holding on Monday, backed up by incremented sell walls below the highs. Buyer support, conversely, was only in evidence at $50,000, providing a wide potential trading range should BTC/USD drop again. BTC/USD order book composition, Binance. Bitcoin may have to wait for its ultimate push to take at the highs. Altcoins are already running hot this week. Cryptocurrency market cap dominance chart. Led by Ethereum, ETH, Monday saw a return to form for the majority of the large cap cryptocurrencies after mixed performance over the weekend. ETH/USD, ever the surprise, shot past $4,000 on the day, showing no signs of slowing as it hit new all-time highs and confirmed traders' forecasts of an attack on $5,000. With ETH/USD up 31% in a week, other altcoins began to copy its success. While altcoins boom on a trading frenzy, a slow but steady transfer of Bitcoin wealth from weak hands to strong is continuing, says popular statistician Willy Woo. Analyzing data late last week, Woo stressed that this year's bull run is different to the rest, because speculative hands are not lasting long and seasoned hodlers are buying up the slack at higher prices than ever. As Cointelegraph reported, the trend has characterized various phases of 2021 when it comes to BTC price.